The famous boxer Mike Tyson once said, quote, "Everyone has a plan until they get punched in the face." And this applies perfectly to crypto. That's because it's common for crypto prices to go much higher or much lower than you expect, and this also tends to happen much faster or much slower than you initially anticipated. And that's why today we're going to give you a step-by-step guide on not only how and when to take profit, but also how and when to cut your losses. This is a video you literally cannot afford to miss. Firstly though, nothing in this video is financial advice. It's educational content intended to inform you about how the crypto market ebbs and flows. If you want more content like this, then smash that like button, subscribe to the channel, and ping that notification bell so you don't miss our next video. Now, the first step to figuring out how and when to take profits or cut losses is to figure out where we are in the crypto market cycle. As most of you will know, the crypto market cycle follows a 4-year cycle consisting of 1 to 2 years of a bull market and 2 to 3 years of a bear market. At the time of making this video, we are somewhere near the end of the bull market phase, with the exact date and time to be determined. In any case, we're at the stage in the crypto cycle where Bitcoin has seen most of its gains, and we're starting to see capital rotate into altcoins, beginning with large caps like Ethereum and Solana. Now, for context, Ethereum started outperforming Bitcoin in July, and it looks like Solana will soon follow suit. If history repeats, then we should continue to see capital rotate into other altcoins in the coming months. Logically, this suggests that you'll need a different approach to taking profits or cutting your losses depending on the crypto that you hold. If you hold primarily Bitcoin, then history suggests the crypto market is at a stage where it's prudent to start taking profits, assuming you haven't already. Conversely, if you primarily hold altcoins, then history suggests it might be a bit too early to take profits or cut your losses. That said, when and how to take profits ultimately depends on your personal circumstances, specifically your time horizon, your level of wealth, your tolerance of risk, and your tax jurisdiction. For example, suppose you have a long-term time horizon, have a high level of wealth with some of your wealth in Bitcoin, have a high risk tolerance, and are based in a jurisdiction that has low or no tax. In this case, one could argue that the most prudent decision would be to take minimal to no profits. And that's because Bitcoin's value has continued to grow over time, and that's simply because Bitcoin has a limited supply compared to fiat currencies. Yes, Bitcoin is very volatile from day to day and even year to year, but the long-term trend has been up and to the right, so taking profit might not make the most sense. On the flip side, suppose you have a short-term time horizon, have a low level of wealth with some of your wealth in altcoins, have a low risk tolerance, and are based in a jurisdiction that has higher taxes. In this case, one could argue that the most prudent decision would be to take frequent profits and cut losses, and that's simply because you're not in the position to stomach multiple years of volatility to make gains. And if you're wondering what your risk tolerance is, we reckon you can figure this out with a simple question. If you buy crypto and its price goes down 90%, do you get overly upset? And if you buy crypto and its price goes up 90%, do you get overly excited? If the answer is yes, then you arguably have a low risk tolerance. Remember that the key to success in crypto is to manage your emotions. Understanding how much risk tolerance you can tolerate is critical to putting together your own profit-taking and loss-cutting strategy. Another critical aspect is making sure you use exchanges that won't charge you high fees that eat into your profits and amplify your losses. And if you don't have a crypto exchange or are looking for a better one, then you must check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and cashbacks on deposits of 75% on the best crypto exchanges. Now, these deals won't be around for long, so take advantage of them ASAP, using the link down below or scanning the QR code. Now, to quickly recap, we are approaching the end of the bull phase of the crypto market cycle. Bitcoin has seen most of its gains, and large-cap altcoins like Ethereum and Solana are finally starting to follow. Taking profits on Bitcoin may be prudent depending on your personal circumstances, but it may still be a bit too soon to start taking profits or cutting losses on altcoins, again depending on your personal circumstances. And this ties into the second step to figuring out how and when to take profits or cut losses, and that's to realize that the chances of you selling all of your crypto at the perfect time are extremely low. Chances are you will either sell too early or sell too late. As such, you must ask yourself another very important question. Would you rather be late or would you rather be early? If it helps, you can ask yourself a slightly different question. What's more difficult for you to manage? Selling early and watching prices go up higher, or watching most of your profits fall and selling late? Again, the answer fundamentally depends on your personal circumstances. It also depends on the crypto that you hold. If you hold Bitcoin, then at this stage in the cycle, you're more likely to be too late than too early. And the opposite is true, of course, for alts. With that in mind, you can start setting actual targets to take profits or cut losses for each crypto that you hold. Let's start with cutting losses, as this is something that probably most altcoin holders are wondering about this stage in the cycle. And for the purposes of this video, we'll analyze Aptos's APT coin, as it's a perfect example of what most altcoins are looking like right now. Very much beaten down. If you zoom out to APT's price history since it launched, you'll quickly notice that it's essentially been chopping in a range, specifically between around $4 and around $15 to $20. And this range is something you'll see on many altcoins, and it should be easy to identify, even on newer altcoins with less price history. As you can see, APT is currently trading close to the lower range of around $4. Naturally, this means that if APT falls below this range, then it's probably going to continue collapsing with no bottom in sight. Conversely, if it bounces, then it's likely to rally somewhere back up to the upper range it's been trading in for the last few years. The fact of the matter is that it's impossible to know for sure whether it will bounce or break lower. But just remember, we're nearing the end of the bull market. And now for reference, altcoins tend to experience their biggest gains at the end of the bull market, namely once Bitcoin has seen most of its gains and capital starts rotating into altcoins. And this is exactly what we've seen in recent weeks, starting with Ethereum and Solana. Given this fact, there's a higher chance that APT will bounce from these levels rather than break lower, and the same goes for many other altcoins. But again, just because there's a higher chance of a bounce than a break doesn't mean it's guaranteed. For instance, there could be unforeseen circumstances like a hack or an exploit that causes it to collapse further. But barring any tail event like this, then history suggests the chance of a bounce is much higher than a break lower. And again, this applies to many altcoins. We're just using Aptos as an example. So assuming that the chances of a bounce is higher than another break lower, we can start looking for levels that APT could rally up to when it bounces. The easiest way to identify these levels is to use the Bollinger Band indicators. The middle line is called the Bollinger Band moving average, and it's surprisingly accurate at identifying key price levels, in this case, key resistance levels. Not surprisingly, most altcoins are below the Bollinger Band moving average on the monthly chart. As you might have guessed, this would be one of the key levels where you could consider taking profits if there is a bounce. In APT's case, that level is around $8. If prices happen to break above this key resistance level, then you can start looking for higher levels like $10, $15, and so on and so on. Again, this is a basic strategy that you can use on almost any crypto that you hold. Just put on the Bollinger Band indicator, zoom out to the monthly, and figure out where that moving average is. It should also be easy to identify other key levels on longer-term timeframes. As a rule of thumb, most key levels are around psychological levels, like $1 or $5, etc., etc. So look for these levels as a place to maybe take profits. This relates to the third step of how and when to take profits or cut losses, and that's figuring out how much profits you should take or how many losses you should cut. Yes, this also depends on where we are in the cycle, your personal circumstances, and the cryptos that you hold. At this stage in the cycle, Bitcoin has seen most of its gains, so taking full profits is probably prudent unless you're holding long term. Conversely, altcoins have yet to see most of their gains, so taking partial profits may be prudent just because there's a high chance that you'll be too early if you sell everything the moment that the first resistance level is hit. Here, I'll use Avalanche's AVAX as another example. As we just learned, we can use the Bollinger Band indicator on the monthly chart to get a sense of where we could start taking profits. The Bollinger Band moving average on the monthly chart for AVAX is around $30 at the time of shooting. Suppose I take full profits the moment AVAX rallies up to $30. Given where we are in the crypto cycle, there's a high chance that AVAX will break above $30 and go to the next resistance level of around $40. In other words, there's a high chance that I would be selling too early and missing out on a lot of the gains at $30. Thankfully, we can mitigate against this using a simple strategy. First, identify the different resistance levels that your altcoin could rally to. In AVAX's case, these are $30, around $40, and around $55. The simple strategy could be to take partial profits at each of these levels and letting the rest ride. For instance, selling 25% at $30, selling 25% at $40, and selling 25% at $55 and letting the rest ride. What I mean by letting the rest ride is leaving that amount invested until it hits some big target, like a new all-time high or some even higher target that you have in mind. It's worth reiterating that this is just an example. You could adjust your take profit levels at much higher resistance levels like $55, $100, and even an all-time high, letting the remainder ride after the all-time high is reached. It's also extremely important to note that this strategy may not be the most optimal for every altcoin, namely those that have already rallied a lot, like Ethereum and Solana. Right now, both ETH and Sol are on the brink of breaking above multi-year highs, meaning that their all-time highs are their only real resistance on the way up, and these all-time highs aren't that far away from their current prices. In cases like these, you must do your best to get a sense of where other people are likely to sell and to front-run those levels. A simple strategy we've mentioned in our altcoin reviews is to look at key psychological levels, like 10K for ETH or 1K for Sol, and then set a take profit limit that's below that level, say 7 to 8K for ETH or $500 to $600 for Sol. It's not a bulletproof strategy, but it's better than no strategy at all. The key takeaway is that whether you take full or partial profits depends on where the crypto is at the stage in this cycle. The closer a crypto is likely to be to its cycle top, the more profits you want to take, especially if there's a chance that the cycle top is already in. Conversely, if a crypto is at the lower end of a multi-year range and is starting to rally, then taking partial profits on the way up might be better. And this leaves the big question, and that's how many losses you should cut and at what levels. Believe it or not, but the answer is to use the same methodology for taking profits, unless your crypto is dead. As we mentioned in our video about whether your altcoin will recover, if the only thing that has changed about it is the price, then there is a good chance it will recover. No guarantees, obviously. But if the team is still building, the community is still active, and there are upcoming announcements, then there is a good chance that it will pump. And that means you can use the same methodology for taking profits to cut your losses, even if you are down 80 to 90%. Specifically, look at the Bollinger Band moving average on the monthly, and any key levels above or below that price to slowly start scaling out. If you have the stomach for it, then you can patiently wait to see if prices will rally back to the levels that you bought. For what it's worth, we reckon that most altcoins would at least rally back up to their highs they set in 2024, and some will rally much more than that. If you're holding an altcoin from 2021 that you bought at the top, you might be out of luck, particularly if it's an altcoin that's no longer being used or in demand. And yes, if your altcoin is dead based on the criteria that we mentioned in that video, then it might be best to bite the bullet and sell at a loss. And you can watch that video right over here. Now, this brings me to the fourth step of how and when to take profits or cut losses, and that's what to do with the gains you've made or the losses you've cut. We know from experience that there's often temptation to rotate capital into another crypto or even into another asset class. By now, you'll know that the optimal strategy depends on where we are in the cycle and your personal circumstances. The difference in this case is that we need to broaden the scope of the cycle from crypto to macro. As it so happens, there's quite a lot of overlap between the two. When stocks are rallying, chances are that crypto is rallying. And if stocks are crashing, chances are that crypto is crashing too. Given this fact, it's probably not a good idea to rotate all of your capital into some hot AI stock after you cash out of crypto. And it's probably a bad idea to rotate all of your capital into another crypto, no matter how appealing they may appear. If you think things like stablecoins and tokenized gold are an exception, think again. These kinds of cryptos come with lots of counterparty risk. There could be problems with an issuer, problems with the reserves back in these cryptos, or problem with the banks that process redemptions. Of course, there are some cases where holding stablecoins and tokenized gold makes sense, like if you can't keep US dollars in your bank account, or you can't easily buy and sell physical gold for whatever reason. To be clear, I'm not saying to avoid holding stablecoins or tokenized assets. All I'm saying is that you need to be aware of the risks with these kinds of assets and know where these risks are amplified during bear markets. Make no mistake, this applies to underlying assets too. Take a second to consider what would happen if there was an economic slowdown or a recession. The chances are that almost everything would go down in value, including gold. So yet again, it comes down to a simple question. Do you want to hold something that's volatile, that has zero counterparty risk, or something that's stable and has counterparty risk? Anyone who's been around in crypto for a long time has opted for the former by gradually buying Bitcoin over the years. You'll recall that's because BTC's long-term trend has been up and to the right despite short-term volatility. Similarly, those who've been around traditional markets for a long time have opted for the former by gradually buying gold over the years, granted that many have opted for bonds. The key takeaway in this case is that you need to be very careful about what you decide to do with the profits you've taken or the losses you've cut in crypto. The last thing you want to do is rotate into an asset that will wipe out your profits or amplify your gains even more. And if you want us to do a full video about what you can do with your crypto gains, then let us know down below in the comments. And if you want to learn more about when the crypto market could top and how high prices could go, then check out our latest video on that right over here. Thank you so much for watching, and I'll see you guys in the next one. This is Nick signing off.